So looking at sterling yen, the monthly chart, the price has come up in 1, 2, 3, 4, 5. This is the sixth consecutive month of higher highs, higher lows, uninterrupted monthly positive closes. So in that case, we've been in anticipation of a pullback, a correction. Um, but the question is when. So currently, the 38.2% Fibonacci retracement level pretty much ties in with these prior highs as a support target on the way down. That's based on the current range between here and here, the low and the high. So that's really just a landmark for the downside at this juncture. And then on the upside, we have come into this area on the chart. This is a prior area of where transactions took place. So you had sellers and buyers all in this area fighting for control, and this makes this an attractive resistance area. So you've got to look at this and start to think, well, perhaps a correction is nigh. This month so far has been a particularly strong month for the pound based on fundamentals, looking at the central bank divergences between the Bank of England and the Bank of Japan. And we've got the Bank of England this week. So, with that being said, today is a US holiday. Um, so there's not much going on today, but there's plenty on the calendar, as can be seen. So, heading into these events, you've got to wonder whether these people that have been buying the market on the way up, that are in the money, you'd wonder if they're not going to be a bit nervous heading into these events and therefore offloading some of that risk. And in doing so, you'd anticipate the market to start coming down. That's my take on the sterling yen. So I'd be looking for the market to decelerate this week, start to tail off and correct. So this is the daily chart now. So bearing in mind that we're still on the front side of the trend, I'm not selling. Not until I see a deceleration. I wouldn't be a seller until I see a deceleration of this market confirmed by a break of this 4-hour trend line. We've already got a break on the 1 hour over here. So let's go down to the 1 hour, but this is the one. So I'm going to make this red, broken that trend there. So this is Monday, the opening balance started up high, we're coming down. So we've broken that hourly trend. Pull that out a bit. And therefore, on a lower time frame, analysis, we are decelerating. And we are breaking structure as we do that. So this is now a broken down market. That's not to say that this can't come back up. For instance, you're going to have shorts that have come into the market here with their stops exposed, vulnerable. So by all means, we can come back up. But the thesis that I'm building here is we're heading lower, regardless of whether we come up. It could be the last breath of air that the bulls are going to take before the sell-off. So I'd be looking for bearish structure to be building here for the continuation in this correction that is starting to form, and taking note of the trend lines as we come down as potential support areas, and also horizontal support areas such as potentially over here. This is on the 1 hour chart. Over here, take into account over here. This is an important level. It could prove to be a strong support area, given that this is where the market originated. This last leg of the impulse originated from here. So there's going to be money sat below here. On the way down into the medium term trend line, which is this here. Now, if we were to pull out to a daily chart, we already measured the monthly Fibonacci's. We can now measure the daily chart Fibonacci's to give us a foundation of potential support areas. And if I've drawn that correctly, so from that high there to, sorry, that low there to that high, the 38.2 aligns with potential support. The 50% mean reversion and down to the 78.6. So I would regard these as support areas, or anywhere really in here. They're all sort of aligning up with structure along the way. Now on the upside, if this market were to continue without the pullback, then we've got the levels drawn higher up to take note of.